Ladies and gentlemen, Greg Michalowski, October 19, 2015. This is a technical look at some of the major currency pairs as we end the day for October 19th, head into the new trading day on October 20th. Let's take a look at the dollar versus Canada. That's been a big move over to the upside in trading here today. Why? Election uncertainty from the election results occurring today. We'll find out more about that later on this evening when the results start to come in. Also, we have oil prices down on the day as well, which is pressuring the Canadian dollar, sending the dollar Canada to the upside. So from a technical perspective, on the daily chart here on Thursday and Friday, we held support against this trend line. Also held support against this swing high that occurred back in March of 2015, also the swing low and a 38.2% retracement. All those kind of contribute to the upside. We went above the 100-day moving average. It's a blue line in the chart at 129.19 level today, and really extended further to the upside. This is that 100-day moving average. So we went above the 100-hour moving average, went above the 200-hour moving average, and as you can see, we're also moved above the 130 level in the process. Good resistance up here at the 130.70. Let's call it 60. I think this is like a 64. This low comes in at 63. This high comes in around the 79-ish type of level. So 63 up to 79 is got good resistance up here. Also has a 38.2% retracement at the 130.70 level. So keep that level in mind. You can see the number of different lows here, and then the lows became highs right here and high right here. And so that and the 38.2% retracement of this move to the downside. So that level is a key level in overnight night trading. Move up toward that level. Could see some sellers against that level. If we move above that, look for stops to be triggered. Let's take a look at the euro versus US dollar. Today's date is our day in trading is about moving to the downside, but the downside was supported by trend line, also supported near the 50% retracement on the move up from the October 1 low to the October 15 high. So that's the range for the month. Came down to the midpoint of that trading range at 113.14, and market finding a little bit of support. If we're in the new trading day, if we move back below that 113.14 level and then move below the trend line here and around the 113 level, we should see further downside pressure for the euro versus US dollar. Bias is more to the downside here. We fell below the 200-hour moving average here in the 38.2% retracement earlier. That's going to be risk level for shorts at the moment, and for any shorts who are short from up higher. You don't want to see the price move back above the 200-hour moving average, back above the top side trend line, back above the broken 38.2% retracement. That's risk level. So on the downside, look for a break of the 50% retracement at 113.14 level, and a break at the bottom side trend line around the 112. Let's call it the 113 level, that to open up the door for further downside in the euro versus US dollar. Let's take a look at the dollar versus yen. I'm going to start off by taking a look at the daily chart here. Remember, the market was consolidated here in this non-trending range here from September 7th all the way up until last Wednesday or so. The market had no closes below the 119.72 level. It had no closes above the 120.60 level. Finally, on last Wednesday's trade, the market broke to the downside, and then on Thursday we had some follow-through selling down to this support area here, or this floor area. Lots of different lows through here coming in the 118.22 to 50 level on this Dow down 1,000-day in August 24th to be exact. The market fell sharply below that level, but the next day the market found support and then found support again, and then went below that level in trading last Thursday, only to have the market rebound to the upside. And that's what we're seeing, a rebound higher. Now this 119.72 level has capped the top side. The high price on Friday's trade came in at 65. The high price in trading here today came in around the 50, well, let's call it 60 level. So a break above the 119.72 level is needed for the euro dollar versus yen to get further upside momentum here. That would be a failure of the break to the downside, and move back into this trading range right here. And if we move above the 72 level, we could see a move toward the 60 level, and then the 200-day moving average is going sideways here at 120.87.88 level. A break above the 200-day moving average in trading this week would be more bullish for the dollar versus yen. Of course, we haven't had a close above that 200-day moving average since this day right here, going back to August 31st. So it's been a long time coming since we've been above that 200-day moving average, but failure down here sometimes leads to a move back to the upside. Off the hourly chart here, the 100-hour moving average is our risk level for traders who are long. That level comes in at 119.18. Let's call it 119.19. If we stay above that level, that's more bullish. Get above the 200-hour moving average, start to move above that 72 level here. Remember, 72 level, that's more bullish for the dollar versus yen. We'll see That's our progression if we're going higher. Sterling versus US dollar. The story about the sterling versus US dollar is the 100-day moving average. That level comes in at 154.88. We went above it on two separate occasions last Wednesday, Thursday, on Friday. Couldn't get above that level, closed down here. And then today we had to move back to the upside here in the sterling versus US dollar and went above that 154.88 level, but only briefly. You can see that on the 5-minute chart. It happened right in this area right here. Here's a 200 or the 100-day moving average right here. The market went above that level, had one closing bar above it. The rest have been below it. Well, sans this one right here. We had one little bar where the market went about a pip or two above it. But for most of the New York session, been stalled right against that 100-day moving average, causing a little bit of more of a corrective move to the downside. That correction has come to the 50% of the day's trading range at 154.60. Watch a break of the 154.60 to lead to further downward pressure for the sterling versus US dollar. On the downside, if we're not able to get below that 50 level and start to see some further momentum to the downside, that could be it for the sterling downside move. We could see a move back above the 100-bar moving average, and a retest of that 100-day moving average is a possibility. Let's take a look at the Aussie versus US dollar. What do we see here on the hourly chart? Well, we see the 100 and 200-hour moving average kissing right here at the 72.81 level. That's going to be a key level in trading this week, or these moving averages are going to be. Stay below it. It's more bearish. Move above it. It's more bullish here for the Aussie versus US dollar. Off of the daily chart, we also have resistance here from last week's trading, and I guess, let's see, Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, all last week's trading couldn't get and stay above the 100-day moving average. Then we fell off on Friday and moving further to the downside. Watch the downside level at 71.60 level. That would be a target level of support. Comes against the underside of that broken trend line for the Aussie versus US dollar. Another interesting pair to watch here is gold. Let's get the gold chart up there. Where are we? I'll find it. There we go. On gold, we moved to the 50% retracement of last week's trading. Went a little bit above that level, about the 1189 level. That's of the move of the year's trading range. This is high for the year. This is low for the trading for the year. Went to test that 50% retracement and backed off. In today's trading, we fell below the 200-day moving average. That's the green line in this chart. That level comes in at the 1175.87 level. And as you can see, we're trading at 1168, so moving to the downside there. Off the hourly chart, we also went below the not only the 100-day moving average, but the 100-hour moving average. That's the blue line in this chart. And below the 50% retracement of this move to the upside here. That's the last trend leg to the upside here for this pair. 200-hour moving average comes in at 1164. Watch that level on the downside. If the market is able to hold support against that level, could see a rotation back to the upside. On the top side here, notice how the top side trend line held here. That prevented the move above the 100-day moving average right here to take any further upside momentum, because ran into resistance against that trend line. So there you have it. Look at some of the major currency pairs and gold to add a little extra information there for you. As far as the next 24 hours, we do have monetary policy meeting minutes coming out of Australia at 8:30 p.m. Eastern time. Those are Eastern Standard Times here. Trade balance coming out of Switzerland tomorrow, October 20th at 2 a.m. Eastern time. What else do we have? The Bank of England's Carney speaks at 6 a.m. Be aware of that. We have wholesale sales coming out of Canada at 8:30. Also building permits and housing starts coming out at 8:30. And Fed's Dudley and Powell both speak tomorrow morning in the U.S., 9 a.m., 9:15 respectively. And Yellen's speaking at 11 a.m. as well. So be aware of any sort of comments from Fed officials. Give us any idea of what might happen at that October meeting coming up. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.